DayTradeToWin, and what we're going to do today is look at the signals, answer questions. I want to also review with you because I've gotten a lot of emails over the last video that I did on the method of breaking up the day into 3 parts, the price action method. And so I do want to go over that with you as well. So if you have any questions, sometimes there may be some audio issues. It happens from time to time. When that does occur, the best thing to do is to exit the room and re-enter the room. It typically fixes whatever sound or audio issues that, if you have any, occur. So the first thing to start off with is remember that trading is risky. Please be careful when you trade. Don't trade with funds you cannot afford to lose. I always discuss the disclaimer because trading is risky, obviously. The other thing I want to discuss is that we do have a new mentorship class because the other class was full. So we started a new class this Thursday. We're starting a new mentorship class on the 23rd. Every Tuesday and Thursday for 8 weeks, and all courses and all software are included. So it's a one-time fee. It's a reduced fee, and you get all the courses and software and all updates for life. So that starts on Thursday. If you're interested, you can give us a call or you can look on DayTradeToWin.com for that information. Now there's a couple of things in case you wanted to download. Some of you may be new, some of you may already have it, some of you may be already Trade Scalper or Atlas Line users. But if you come here to courses and software and you come here to downloads, we do offer the news indicator for NinjaTrader 8 as a trial. You can download it, use it, and that's actually what you're seeing up here is the news indicator. So I know when we have news that's about to come out, it gives you a sound, some type of audio sound, and that way if you're about to take a trade, I think it's important to know that something's gonna happen, right? Something is going to happen, and you have to be very careful, obviously, because the market could whipsaw up and down, and we don't want to be in that kind of environment during a news event. And we also have a few other things here on DayTradeToWin.com. So there's a lot of information. Some of you already know this. For example, we have a trading videos page with probably 500 videos here on trading. We have a blog that always indicates the latest information on trading, videos as well. We have a simulator in case that you would like to start trading and learn a little bit. We do have a simulator, NinjaTrader, for free with live data. That way you're able to practice, learn a little bit about trading, and there's also the Get Started guide here. Now the Get Started guide gives you the same information, but it's detailed. It's a detailed information on getting started and how to trade. And we also have a how-to and setup, and this is actually a page that a lot of people visit because they want to learn about activating our indicators, especially if you're a client. If you're having trouble with that, you don't always need support, although we include support with everything, but you may want to do it on your own, how to install indicators, organizing chart windows, optimizing your chart, and so on. So there's a lot of information here on the how-to and setup. All right. So when we look at trading for the day, my biggest advice is to not trade right as the market opens, because it's an unclear situation that's happening, and it's a perfect example of what we're seeing today when the market goes. So I'm living in the Eastern Daylight Savings Time now, time zone, and what we have is at 9:30 the market opens. And so what happens is that there's a lot of traders battling it out. There's buyers, there's sellers. Right as the market opens, there's a huge amount of activity. And so the market could go very strong and whipsaw up and down. And that's exactly what we're seeing. Now, one of the things that gives it away, and this is normal, so those of you who already know about the average true range, the ATR, it's a free indicator that's included with most trading platforms. And I have it set down here, and it's with a setting of 4. And I'm using a 1-minute chart right now. And so this ATR is typically slower or more tame during the night or after hours or pre-market, but as soon as the market opens, you see what happens. The ATR rises and you see how strong and how volatile the market is. and this is normal, completely normal. This is to be expected. So I don't want to be right in the market as a buyer or as a seller as these whipsaws and as these changes occur. The same thing happens with a news event. When the news event comes out here, you see here on the 22nd, we have the FOMC at these times here. I don't want to be in the market because we could have these huge amount of whipsaws up and down. So always understand that we can trade buying and selling under normal conditions, but when there's situations that are out of our control, that's when we have to just step back a little bit, wait until this is over, the event is over, whether it be trading right as the market opens, whether it be a news event, whether it be news, and then we can continue. So this is a big deal for me. I just don't want to buy and sell and follow every signal. I want to have a bigger picture, and I do see the ATR is very high. So what that means is that if I was to take a trade, this is my expectation. About 6 points, the market is able to move up or down from where we currently are. Now this, if you don't have an understanding of this, as far as price action is concerned, it's important, because if you have a stop, let's say of 1 point or 3 ticks or 2 points, it could easily be taken out, because each one of these candles from high to low, from high to low, from high to low is averaging 6 points. So 6 points is about 24 ticks, and so you could see that it's so easy to get stopped out under these conditions. So you can't really trade the same way when the market is slow in comparison to when the market is more volatile. We have to adapt to both situations. So I use the ATR, and I recommend everyone add this to your chart, whether you're trading any of our methods or software or not. Just before you enter into a trade, look at the ATR and say, what exactly is the market doing, and what is the expectation? And so if the expectation is about 6 points, you know that you can't have a very tight or small stop, because it'll take you out instantly as soon as the market jumps in. As soon as you get into the market, just the random volatility of the market going up and down will take you out of the trade. So you do have a couple of options, right? One is increase your stop. The second is don't trade at all. You just wait it out until it gets a little bit slower. The third is wait for a perfect signal where everything aligns. So it's not as if you have to jump in and force yourself to incur huge risk. You can definitely wait a few minutes until things calm down before jumping in. So that's important as well. Now, as far as what you're seeing here, the Trade Scalper signals, the Trade Scalper method gives a lot of signals, buys and sells and so on. So let me first explain to you what's happening here. This first signal here to go short right as the market open is a terrible idea, because right as the market opens, like I said, there's a lot of activity, a lot of buyers and sellers battling it out, which means a lot of whipsaw. So I always tell everyone, don't trade the first 5 minutes or so, 10 minutes of the session, the trading session, because that's exactly what usually happens. And a lot of volatility as well, right? The next thing that I see here is this next signal here, 43.59.75. So this long here, to go long at 43.59.75, let's say you entered here or here or here. So this entry here at 43.59.75, when it comes down, moved about 4 points. So 4 points is a big move up in your favor. So if I look at the ATR, I can see already that because the market is so volatile, it makes these big moves. So you have more of an understanding of what to expect when you see a signal. Take a point, take 2 points, take more, but it's all based on the ATR in the current conditions. And so this signal here, 43.59.75, it gave an opportunity for 4 points to the upside in your favor. And as far as the risk involved, the market moved about 3 1/4. So it's about half of what it's doing. Now the next signal, whether it be a buy or a sell here, again, always refer to the ATR and have an understanding of, well, if I take this trade, this is a possibility. 5 points, 5.5 points, the market could move from where it's currently trading or the last closing price right over here. It could easily move up or down 5.5 points. And that's exactly what we're seeing because of the volatility. Now, by the way, this is a live presentation. If you have questions, please don't hesitate to ask them. So I have Ali, Chris, Clyde, Dave R, Dennis, DJ Mike, Jack, James, Kerry, Larry, Malik, Mark, Rem, Rich, Stefan, and Sunny. Rich says here, so you would have taken the second long trade even though the ATR is high, only if the risk is typically less than 5 points. So one of the rules that we have, Rich, let me just forward this to everybody. One of the rules, Rich, that we have is, I say that we should trade when the market is right. Typically, when you have the average true range, the ATR, this high, it presents a different element. So I know that the market's going to move much stronger. I know that my risk is going to be larger. And so for most traders, what I recommend is the ATR being at 5 and between 1. So this is typically where I want to be as a trader, between 5 points and 1 point, which is 20 ticks and 4 ticks. Maybe even 3 ticks if you're scalping, that's fine. But as soon as it starts to travel above 5 points, and remember, we're only looking at a 1-minute chart. So if you look at a 5-minute chart, which is typical, right? 5-minute chart, we're looking at opportunities, whether it be the blueprint, the roadmap, the atlas line. This is probably at an extreme value. This puts us at a little bit of a disadvantage, Rich, because the risk, right? I mean, I don't mind risk. Risk is part of trading, but I don't want to have a 10-point risk because of the volatility and just because I need to trade. I think it becomes problematic with these large losses, and I need to understand that before jumping in. So between 5 points and 1 point is my recommendation for everybody. So really, to answer your question, is if I was going to take this 43.59.75, I needed to have a larger stop, which means if it goes against me, a larger risk. If I was going to take a target, I'd take 4 or 5 points because that's what the market was doing at the time. But it's not for everybody, right? So it's not something that I say and push into these high volatility areas. We can definitely wait a few minutes and see the market slow down and then take trades that are a little bit better risk to reward ratio. DJ Mike says here, I know the ES is more stable than the NASDAQ to whipsaw for this style of trading. Or would the ATR adjust enough to make it work similarly? Yeah, so the ATR is the same idea for all markets. It's universal. So you can definitely trade using the setting of 4, whether it be the E-mini, the NASDAQ, the Euro, the Treasury notes, the FESX is another market that I like, the FTSE 100. Those markets, they're all typically the same when it comes to moving up and down and using the ATR. It's just that the average true range, the scale of the ATR, needs to be understood or adjusted. So what you're seeing here is points. In some markets it works in ticks, some markets it works in hundreds or thousands. You just have to say, well, what is this ATR telling me in relationship? So the NASDAQ also works in points. So it's very similar, and you have to also understand if the ATR is high on the NASDAQ, and it's really easy to see, by the way. So if I crunch up the chart here, right, you can see that most often here is where we're at, right? So you can see that this is an outlier where the market is just highly volatile. It's just a pop. Maybe it's just the start of the day. You can see that typically it doesn't do that, right? So if I go back, it doesn't do that. Let me just this here. So you can see on the ATR, it doesn't do that. It gets a little bit slower, but it doesn't typically go above 5. So that's what you're doing. If you're looking at the NASDAQ, if you're looking at another market, you look at what's normal and then see what happens when, so if I go back here, you can see that it very rarely goes above 5 points. And when it does, it's just a pop like this here. And you see again, it's right as, well, about half hour into the market open right here. Maybe it's based off of news, maybe a news event here, and so on, right? So you can see that that's not what we're seeing here, is a little bit on the higher side, higher volatility. All right. DJ Mike, let me know if that answered your question. All right. Now, besides going into and teaching you something today, which I am going to do, explain here, I want you to understand a little bit about price action and how we're looking at markets. One of the things that I think most traders don't really understand is what the wicks here are trying to tell us. So here is a tip when it comes to trading that I think is overlooked, is what happens when multiple candles at the same area, at the same price, are doing a very similar thing. And how do we understand that as well? So this, what I'm going to teach you or show you here right now, is just a little bit of the blueprint, explaining a little bit about one of the methods we teach in the mentorship, where the market is showing us multiple examples of failing at a certain price. And usually what I like to look at is the wicks, which give it away, where there's multiple attempts at the market failing. So for example, what you see here, these wicks here, they're not really big wicks. They're not really anything that I could, say to you, wow, look at that. But if you looked at a different situation, let's take a look at this here, for example. Do you see that the market came down, and then stopped, here with another wick, stopped, and it stopped here again? And I'm looking at more the wicks to show me that market is trying at a specific price and failing, and showing me that it goes all the way down and then comes all the way back up. So when you see multiple candles of that, just pay attention, because that typically is indicative of something changing, and not just reversals, just the market is pausing for the moment. So I'm not always looking for a reversal. So this one candle by itself may be irrelevant, but when you look at what the market is doing with this wick here and this wick here and this wick here, you see how it's indicating that things are trying and failing to go higher for the moment. And the same thing here, like this, like this, like this, like this. So when I see these multiple candles with wicks at the same area, at the same price, to me, that's indicative of things that are changing, pausing. Maybe it'll continue, but pay attention to them, because they are a huge part of price action trading. Now, on a 1 minute chart compared to a 5 minute chart, look at the ATR, how high it is at 8 points. So if you're looking at a 5 minute chart, I would definitely recommend you switch to a 1 minute chart where market is a little bit more stable. This is a lot of volatility. You can lose a lot of money if the market just whipsaws up and down and up and down. It can definitely move about 8 points, 9 points very easily. And so you see there's a relationship there where this candle, this candle, this candle, they're all very strong, which means the next 4 bars into the future will give you the exact same environment. That's important to understand. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com. Join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.